Hi everyone, this is Michael Kramer of Ma Capital. Today is Tuesday, September 24th. Most of this week's going to be fairly quiet the rest of the week. The big numbers later this week will be initial jobless claims. These are sort of the numbers I think that the market's really kind of focusing on, given the importance with some of the labor data we've been getting. Obviously, despite some data that suggests labor market is softening, you're really not seeing it in initial jobless claims, and so I think you really start until you start seeing initial jobless claims going up or some sign that they're going up. Equity market and credit markets probably aren't really buying into this whole idea that you're going to see a softening of the labor market, because at least when you look at the yield curve and you look at the dollar, it's sort of implying that the economy is really starting to slow. When you look at the equity market and credit spreads, they're not really quite in that same boat yet. PCE will then be on Friday. We're looking for a 0.1% increase for August versus 0.2 last month. 2.3% year over year, down from 2.5. Month over month, we're looking for 0.2% on core, and we're looking for quarter rise to 2.7% from 2.6. And then, of course, next week we're really going to start getting a lot of that really important data with ISM and JOLTS, and of course the other numbers that come with it, jobs numbers. When we start off this week, I thought we would start with copper, just because copper was up fairly big today, up about 4%. And you can see already copper has gotten itself overbought really quickly, with an RSI over 30, with an RSI over 70, and already above its upper Bollinger Band. This is obviously, following the news about China trying to stimulate the economy. So at this point, maybe we're looking for copper to sort of pause in this region, potentially consolidate a little bit, perhaps before it makes its next big move higher. We already identified that it put in what looked like a pretty good bottom, but again, we moved really quickly and we're already overbought. So this might be a good area to watch to see if copper just kind of catches its breath for a couple of days. But overall, the trends look fairly bullish. And suggest maybe we can get back into this 470 area in the not too distant future. Gold also continues to march higher, but gold, just like copper, is now in this overbought state. RSI is about 75, well above the upper Bollinger Band now for a couple of days. It seems like every time we get to this upper Bollinger Band, we consolidate sideways and move back to the 20-day moving average. It looks like we're more in a sort of situation where we're likely to see gold come back down to the 20-day moving average as opposed to trading sideways. It looks very similar to what happened in this time frame here. So this would be something to be paying attention to. Again, just getting sort of overextended at this point. The euro has been strengthening versus the dollar. We can see it did break out of that flag pattern. We're trying to get above the Bollinger Band right now. That's been serving as resistance. But again, the next area of significance probably comes around the 112.5 to 113 area. That's a region that goes back to July of 23. And then after that, we're talking about the potential to move back into this 114 region. And that certainly seems like a possibility. But again, we just need to see it clear this upper area in here around 111. Support again, right here around this 112 area. Support again, probably at the 20-day moving average or so, around 110.90. British pound also been strengthening versus the dollar. We've seen the British pound really break out. We had been talking about the potential for the British pound to break out. British pound, like gold and like copper, kind of overbought at this point. So you want to probably keep an eye out for this to see if we consolidate sideways, maybe even move back down to the 20-day moving average in the next couple of days. But again, I would watch this area in here. It's really had a really big move in a very short period of time. Upside resistance probably somewhere in this 136 area, which goes back to February of 22. Japanese yen, you can see it's come back to the 20-day moving average. That was pretty much as we were looking for it to do. Right now, resistance seems pretty firm at this 143.30 area. If the U.S. economy is indeed weakening and you were to get some sort of soft labor numbers on initial jobless claims, then I would be looking for Japanese yen to continue to making its move lower. When we look at the yen on a closer basis here, we can maybe start making a case that you're seeing this more of a consolidation taking place right now in the yen, as opposed to a new trend being formed. You can certainly see that it looks almost like there's a bear flag that's formed in the yen, and with the potential again to move back down into this 141.85 to 141 level would certainly be a possibility. And again, it's going to depend a lot on what we're seeing out of the Fed in terms of what they're saying and what the economic data is coming in like. The FTSE has made a move lower. We were looking for that move to come down here, although it didn't come down exactly in a straight line. It looks like now the FTSE is probably getting ready to make another move higher here. And again, we tend to like to use copper just because copper can be a really good gauge in terms of predicting and helping us figure out where the FTSE is going. It looks like there's a bull flag that's present in the FTSE, and this may suggest there's room to get back to around 83.50 or so. Again, when we overlay the chart with copper prices, we tend to see that copper and the FTSE tend to move together over time, and this would be a really good indication because we've seen copper really make a big move over the last couple of days. Perhaps we're going to see the FTSE test this upper range here around 83.75 or so. The DAX continues to be a tough one for me to assess, and it just seems like the DAX right now kind of just trades separate of a lot of different things that are going on from a fundamental standpoint. I get that the DAX is a very top weighted type of index, and that's potentially playing into some of this. But again, when you sort of think about where the economics are, they're not really making much sense with the way the index has been playing. And so when we just look at it from a purely technical basis, you can see clearly what looks like maybe an island reversal pattern was put in down here. And so now we just need to see whether or not the DAX can get above 18,987. I mean, that's the level of resistance that goes back to early September. And really, you can go back to and start looking to some of these other levels at around 18,890, which came back in May. So that's this lower level down here. So at this point, we've now tested this range 3 times. We don't know if we've failed yet, but I would think that if we were to fill the gap down here, that would be a really bad indication because, again, this would be the third failed attempt of trying to break above this 19,000 barrier. When we look at the DAX on a daily basis and just take a look again at some of these other factors that we look at, I mean, we can see it's clearly not overbought. The RSI is well below 70. The upper Bollinger Band is somewhere around 19,165. We're trading above the 20-day simple moving average. The 10-day exponential moving average is trading higher. So at this point, it would seem the DAX has the favor of breaking out and moving up, of at least testing this upper band at around 19,150. Again, if it fails to do that, you got lots of gaps to fill to the downside, with your support probably coming first at 18,680. The NASDAQ has also moved up. We're in this area of resistance for the NASDAQ. You can see it really runs across this top, and now we're in this region here. The upper Bollinger Band is right now around this 20,125 area. So we're approaching that. RSI not extremely overbought at just 62, but there is room for that to continue to go higher. There are gaps to fill also on the NDX all the way down to 19,342. Typically when we get gaps like the one we saw on Thursday morning, which kind of just came out of a low volume overnight future session, typically these type of gaps, these straight line drops into the close with these sharp upward movements tend to get filled fairly quickly. And I've been expecting this gap to get filled now for a couple of days, and it just hasn't materialized to this point. So again, this was a big area here. I mean, if the NASDAQ can manage to break out, I would think you would target this 20,373 area on the NASDAQ, which would allow this gap to get filled from back on July 17th. The S&P also has gone on to make a new high. Very similar sort of pattern here. Again, expecting this gap to get filled. It hasn't happened yet. We saw something similar over here, and it did get filled. We've also saw this very similar pattern here from Labor Day, where we got this big run up into a close and then a gap opening. This is basically the same pattern, just in reverse. And instead of us coming back down to fill it, we haven't really seen that yet. So right now we're kind of just hanging around this upper support area around 57.32. It is worth noting that there's a big level of resistance from a gamma perspective in the options market up at 57.50. That could actually limit further gains from here. And when we take a look at this pattern, at least, I guess you could start making a case that maybe this is some sort of ending diagonal triangle pattern that's formed. So we're going to want to keep an eye on that as well, because again, there just seems like there's limited upside in this pattern at this point, based off of that wall and based off of this gap, and based off of the fact that you have some higher levels of resistance forming in the S&P due to the JP Morgan collar that exists around the 57.50 area. So that's something to watch for. But again, you would need to gap down fairly quickly to take that out and for this to develop. Clearly, if we break out above 57.35, all bets are off, and your next big level of resistance comes probably around 57.50, like I already stated. The Dow has also been struggling. Again, I was thinking that maybe we would move lower last week. It looked like we were set up for that. We had the Fed meeting that created that hole in the wall gap that was created. That hasn't been filled either on the Dow. You can see the Dow's basically also been just trading sideways since middle of last week. So again, like the S&P, we have the potential to move down to this lower area around 4,490. But again, if you break out above 42,270, you have room to run, because there's no overhead resistance. You're at a new all-time high. And when you look at it, at least from a Bollinger Band perspective, there is a little bit more room to go up before you really get into overbought territory, 42,350 or so. Anyway, I hope you found this helpful. Have a good week, and I'll see you next. Bye.